super excited for this video. So, 4 critical tips when lending from your IRA. Now, I made a cute little acronym for you to remember the 4 tips, and it's called FEAR, okay? Because I want to strike some fear in you. Now, I'm gonna look at my notes, okay? Because I wrote it down because it was super clever, but I don't have a lot of memory space. So, for F, you want to form an entity for your IRA for protection. Okay, so this came up actually with a student I was recently working with on a private loan, and she has a solo 401k actually. And if you don't know what a solo 401k is, it's basically a retirement plan for people who are self-employed, and it allows you to contribute up to $69,000 per year to your retirement account. Now, she created a self-directed solo 401k, and she wanted to do some private lending from that solo 401k. So she was in the middle of a loan transaction. Her and the borrower had already agreed on all the terms, and she wanted me to kind of go over the agreement to make sure that everything looked good. So one thing I noticed on the agreement was she listed her actual trust name as the lender. So typically how the solo 401k is set up, it's like a trust, and then under the trust you'll have like your traditional solo 401k or your Roth solo 401k. Now, instead of having the name of like an entity, for instance, as the lender, she had her actual trust name as the lender. Now, this is where I got a little bit murky, and I advised her to check with the people who created the trust and solo 401k accounts for her. But basically I asked, okay, are you lending from any type of entity like a corporation or an LLC? And she said that they told her that she could just lend from the trust. And I'm like, well, it's not a question of if you can, it's just a question of, does your trust or your solo 401k own an entity that you can lend from to shield your assets from liability? And she went back and asked, and they basically said that they could add that for her to make that shield. So the reason that I'm telling you to form an entity is your retirement account, even if you're self-employed, belongs to you. Like, it doesn't belong to the LLC that's associated with it. It belongs to you, or it belongs to the beneficiary. Now, the thing here is, if something goes wrong with the loan and she has the trust listed as the lender, that can potentially expose all of her personal assets to liability. We don't want that. But I'm thinking if she creates an entity as sort of a barrier between the trust account and her lending activities, then maybe she can, cut off that barrier and also protect the anonymity of her trust. Like, you don't want your trust name just out here willy-nilly on lending documents, you don't know where those documents are going. You don't know what they're being used for outside of your transaction. So it's better to have like a barrier there and just form an entity that you can use specific to lending. Another thing is, I was asking her, so when you have, in your trust, is lending your only activity? Because you can actually do other things with the money in your solo 401k. Like, you can put it in the stock market, you can buy bonds, you can buy real estate. And so it's better to siphon off the private lending sector of your trust, meaning like your solo 401k, rather than to have just the entire fund exposed to the the risk associated with private lending. So that's the first thing. The F for fear is for forming an entity, okay? And that's forming an entity within your IRA for added protection. Okay, now the E. Ensure proper documentation and compliance. Now, the thing with these self-directed accounts is there's a lot of regulation and a lot of rules. So I have a self-directed Roth IRA, but I also have a solo 401k. Now, these 2 accounts have different rules, different advantages, different disadvantages. And so make sure that you understand what you can and cannot do with these different accounts, and make sure that you're documenting all the things you need to document to make sure you're compliant. you can get into a lot of trouble if you're ever audited, or if you ever have to provide documentation or information to regulators and you have not been keeping organized documents. So just add that to your systems. Maybe you create a secured file storage system for storing documents related to your lending operations in this IRA. What you could do is kind of develop an operating procedure. So okay, from potential client to repayment of the loan, what are all the processes that are in place and what are the associated documents, and then have those stored for each client in a place that's easily accessible, that you can easily reference. The last thing you want to be doing is scrambling to find things when you need them most. Okay, so we talked about the F, form an entity. We talked about the E, ensuring that you have proper documentation and compliance. Now let's talk about the A, avoiding prohibited transactions. So there's a ton of prohibited transactions, and even just like nuances within transactions when you're lending from your IRA, or even just operating from your self-directed IRA in general. So I know one of the things that stood out to me, so like with solo 401ks, for instance, you can actually make a loan to yourself, but there's all these parameters around the loan. So like it has to be repaid within 5 years. It has to meet certain interest rate requirements, like prime plus 2% or something like that. It has a cap, so like you could only lend $50,000 to yourself max. It's just very interesting, and that's for solo 401ks. Like self-directed IRAs, you cannot lend to yourself at all. Like there's no self-dealings at all. And so just make sure that you know what the prohibited transactions are and that you avoid them at all costs. All right, now for the R. This is something that's very near and dear to me, reinvesting your gains. So, I mean, you can, like when you make money from private lending in your IRA, you can definitely take that money and, invest in other things like the stock market or bonds or real estate or whatever. But what I do, and this is according to the plan that I've created for myself, I reinvest those gains back into my lending fund because I want to be able to give bigger loans and grow my fund faster. Now it's up to you what you decide to do with your money. I'm not giving you investment advice, and I'm not an investment advisor, but I'm just saying that one of the key ways to grow your account quickly is to reinvest those funds back into your lending fund. Of course, diversification is important. So I'm not saying put all your eggs in one basket, but maybe come up with some sort of strategy for, how much you want to reinvest and according to what timeline, so that you can continue your lending activities. You don't want to be stuck lending $5,000 for years, You want to eventually be able to do bigger loans, get bigger returns, and continue to grow your IRA. So those are the 4 critical tips. We have the F, the E, the A, and the R to strike the fear in you. So let's go over them one more time. F is form an entity within your IRA or your solo 401k or whatever product that you're working from. The E is ensuring proper documentation and compliance. The A is avoiding prohibited transactions. And the R is reinvesting those coins back into your lending fund.